Welcome to our in-depth analysis of Garden Stage Limited, ticker symbol GSIW. In this video, we'll break down the recent wild ride the stock has taken, from catastrophic crashes to sudden spikes. Whether you're a seasoned trader or just curious about market volatility, the story has something for everyone. Let's start by setting the stage with a quick overview of GSIW's recent performance and why it's caught the attention of so many investors. We'll explore the numbers, the trends, and what they might mean for the future. So buckle up as we dive into the roller coaster world of GSIW stock. Over the past 3 months, GSIW has been a textbook example of extreme volatility. The stock started at 1.52 on June 16, only to experience a catastrophic crash to 0.22 by July 21. Since then, it's been anything but stable, with wild fluctuations that have left investors both anxious and hopeful. This kind of price action isn't just rare, it's a signal that something significant is happening behind the scenes. As we look at the numbers, keep in mind that such volatility can create both risk and opportunity, depending on your perspective and strategy. After the dramatic crash in July, GSIW's price didn't settle down. Instead, it continued to fluctuate, eventually finding a temporary home around 0.1317 as of September 12. Interestingly, the most recent trend appears to be slightly upward, with the stock closing higher after a notable spike in trading volume. This uptick has sparked renewed interest among traders, but it's important to remember that the overall environment remains highly unpredictable. Let's take a closer look at what's driving these recent price movements. Volume is a key indicator of market activity, and for GSIW, it's been just as volatile as the price. During the July crash, trading volume surged to extreme levels, signaling panic selling and possibly some institutional activity. Fast forward to September 12, and we see another spike in volume, this time accompanying a price increase. High volume during both downward and upward moves suggests that many traders are actively participating, making the stock's next move even harder to predict. Shift our focus to moving averages, a staple in technical analysis. Currently, all the shorter-term moving averages, such as the 5, 10, 20, 21, 25, and 30-day averages, are sitting below the current price. This setup typically signals a short-term upward trend, suggesting that recent momentum is positive. For traders looking for quick opportunities, this could be a bullish sign. However, it's crucial to consider these signals in the context of the broader trend, which we'll discuss next. The flip side, the longer-term moving averages, like the 50, 63, 75, 100, 125, 150, and 200-day lines, are all above the current price. This reflects the dramatic fall from previous levels and paints a much more bearish long-term picture. For investors with a longer time horizon, this is a warning sign that the stock hasn't yet recovered from its earlier losses. The contrast between short-term and long-term signals is a classic sign of a stock in transition. Another interesting technical detail is the relationship between EMAs, exponential moving averages, and SMAs, simple moving averages. For shorter periods, the EMAs are generally higher than their corresponding SMAs. This suggests that recent price action has been stronger, as EMAs give more weight to recent data. It's a subtle but important sign that short-term momentum is picking up, even if the longer-term trend remains negative. When we look at the broader set of technical indicators, the picture gets even more complicated. Short-term indicators are bullish, with the current price above the short-term moving averages, but the longer-term indicators remain bearish as the price is still well below the long-term averages. This mixed signal can be confusing for traders, and it's a reminder that timing is everything when dealing with volatile stocks like GSIW. VWAP, or volume weighted average price, is another key indicator. For GSIW, the VWAP stands at 0.353, which is significantly above the current price of 0.1317. This means that, on average, traders have paid much more for the stock than it's currently worth, a bearish signal. It suggests that most investors are currently underwater, which could lead to further selling pressure if confidence doesn't return soon. We apply linear regression to GSIW's price data. The result is a strongly negative slope, especially when including the period before and after the July crash. This statistical approach confirms what the charts are telling us. The overall trend has been sharply downward. The R-squared value would likely be high, indicating that the downward trend is consistent and not just a random fluctuation. This adds another layer of caution for anyone considering a long-term investment. Given the recent spike in both price and volume on September 12, what can we expect for the next trading day? The most likely scenario is that the opening price will be close to or slightly above the previous close of 0.1317. However, with such extreme volatility, any prediction comes with a high degree of uncertainty. Traders should be prepared for rapid changes and have a plan in place for both upward and downward moves. Support levels are critical in technical analysis, as they indicate where a stock might find buying interest. For GSIW, the nearest support is around 0.1, a level where the stock has recently bounced. If the price falls back to this level, it could attract buyers looking for a bargain. However, if this support fails, the stock could see even lower prices, so it's a key area to watch. The flip side, resistance levels show where selling pressure might increase. For GSIW, the nearest resistance is at 0.2016, the recent high reached on September 12. If the stock can break through this level, it could open the door to further gains, but if it fails, we might see another pullback as sellers step in. Monitoring these levels can help traders make more informed decisions. Average True Range, ATR, is a popular tool for measuring volatility. While we don't have the exact ATR 14 value for GSIW, the recent price swings suggest that the intraday range is very large relative to the current price. This means that even small moves can represent big percentage changes, making risk management especially important for anyone trading this stock. Let's imagine a bullish scenario. If GSIW continues its recent upward movement and manages to break through resistance at 0.2016, it could attract momentum traders and potentially target even higher levels. Renewed interest and increased volume would be key drivers in this case. However, given the stock's history, any rally could be short-lived if sellers return in force. Now let's consider the bearish case. If GSIW fails to maintain its recent gains, the price could pull back to the support level around 0.1 or even lower. This would likely trigger more selling, especially if confidence in the stock continues to wane. For risk-averse investors, this scenario highlights the importance of setting stop-loss orders and being prepared for further downside. There's also the possibility that GSIW enters a period of consolidation, trading in a narrow range around current levels. This sideways movement can be frustrating for traders looking for big moves, but it can also provide opportunities for range-bound strategies. Watching for a breakout in either direction will be key to spotting the next trend. Such high volatility, risk management becomes even more important. Setting stop-loss orders, limiting position sizes, and having a clear exit strategy can help protect your capital. Remember, it's better to miss out on a potential gain than to suffer a large loss. Always trade with a plan and stick to your rules, especially in unpredictable markets like GSIW. Volatile stocks like GSIW often trigger strong emotions among traders, from fear during crashes to greed during rallies. Understanding market psychology can help you stay calm and make rational decisions. Try to avoid chasing the crowd or making impulsive trades based on emotion. Instead, focus on your analysis and stick to your strategy. Volume isn't just a measure of activity, it can also confirm the strength of a price move. For GSIW, spikes in volume have accompanied both major drops and rallies. Watching volume alongside price action can help you distinguish between real breakouts and false alarms. High volume on a breakout is usually a stronger signal than price movement alone. For those interested in short-term trading, GSIW's volatility can present unique opportunities. Strategies like scalping or day trading may benefit from the rapid price swings, but they also require quick decision-making and strict discipline. Always use tight stop-losses and be prepared to exit quickly if the trade goes against you. For long-term investors, GSIW's current setup is much riskier. The stock's price remains well below its long-term moving averages and the overall trend is still negative. If you're considering a long-term position, it's important to weigh the potential for further declines against the possibility of a turnaround. Diversification and patience are key in such situations. It can be helpful to compare GSIW's performance to similar stocks in its sector. If other stocks are also experiencing high volatility, it may be a sector-wide issue. On the other hand, if GSIW is an outlier, there may be company-specific factors at play. Always look at the bigger picture before making investment decisions. Major news events or company announcements can trigger sudden moves in volatile stocks like GSIW. Always stay informed about upcoming earnings, regulatory changes, or other potential catalysts. Sometimes, the market reacts more to news than to technical signals, so keeping an eye on headlines is just as important as watching the charts. Liquidity is another important factor when trading volatile stocks. High volume can make it easier to enter and exit positions quickly, but low liquidity can lead to slippage and wider spreads. For GSIW, recent spikes in volume have improved liquidity, but this can change rapidly. Always check the order book before placing trades. Trading volatile stocks requires emotional discipline. It's easy to get caught up in the excitement of big moves, but sticking to your plan is essential. Avoid revenge trading or doubling down on losses. Take breaks if you feel overwhelmed, and remember that there will always be more opportunities in the market. There are many tools available to help analyze stocks like GSIW. Moving averages, VWAP, ATR, and linear regression are just a few examples. Combining these tools can give you a more complete picture of the market and help you make better decisions. Experiment with different indicators to find what works best for your trading style. Every volatile stock offers a learning opportunity. By studying GSIW's recent price action, you can gain valuable insights into how markets react to news, volume, and technical signals. Keep a trading journal to track your observations and refine your strategy over time. The more you learn, the better prepared you'll be for future market swings. Sum up, GSIW has experienced extreme volatility, with a catastrophic crash in July followed by wild fluctuations. The recent spike in price and volume suggests renewed interest, but the longer-term trend remains negative. Technical indicators are mixed, making it crucial to stay alert and manage risk carefully. Whether you're trading short-term or investing long-term, always do your homework and stick to your plan. Thanks for joining us for this analysis of GSIW stock. Remember, volatility can create both risk and opportunity, but it's essential to approach the market with discipline and a clear strategy. If you found this video helpful, be sure to like, subscribe, and share your thoughts in the comments. Stay tuned for more market insights and analysis in our upcoming videos.